Learn the art of investing on Moneywise.
This is the Moneywise Podcast. My name is Sheetal, and today we're about to listen to wisdom and insights on the concept of small caps. Because, as we all know, there is always this sentiment, a sinking feeling when you see a small cap really grow and become in this multi-bagger. And then we get the sneaking suspicion that, we've not vested our money in that. And that's just what, the crux of the matter is. And there are more questions, obviously, that are simmering in your head on the topic of small caps. So I thought, why not bring in Manish Gunwani, who is heading the equity fund management for Bandhan Mutual Fund. He brings himself with him, in fact, a wealth of expertise, management expertise as well, and has an excellent track record of wealth creation for investors. He graduated from IIT Madras and has a postgraduate diploma in management from IIM Bangalore. Welcome to the show, and how are you doing today?
Hi, Sheetal. Thanks a lot for having me on the show.
And I think, pointed out to our listeners the crux of the matter, right? It's a very common regret that I articulated some time back when you see small caps grow and then after that you feel, oh my God, have I missed the bus on this one? And that pain of a missed or what we perceive as a missed opportunity continues to haunt us even as we are not able to hit the iron on the head, right? These are the kind of investor sentiments that I'm sure you encounter very often. But for the better understanding of our listenership, can you explain, first up, the small cap category?
Well, Sheetal, the thing is, the small cap category, if you see the technical or the more formal definition in the industry, it is any stock which is beyond the top 250 by market cap broadly, because the top 100 are called the large cap, the 150 after the top 100 are called the mid cap, and anything beyond that is the small cap. So that's the more formal definition. The way I think about it is, I think the DNA of investing in small caps is quite different from, let's say, large cap. I think there is a triple R difference. Mm-hmm. One is returns, one is research, and one is risk. Let me spend a couple of minutes on each of these. So first is when you look at small caps, when we invest there, unlike, say, large caps, the return thinking is a bit different in the sense that a lot of times with large caps, you're thinking of it versus the benchmark. Whereas when you're investing in small caps, the element of absolute return is much higher. Mm-hmm. So when you look at large caps, you think, is it going to be Nifty 100, Nifty 200, whatever? But when we are investing in small caps, we are trying to see if can it double in 3-4 years or 5 years or whatever, rather than worrying about what is the benchmark, is it there in the benchmark or not, will it beat the benchmark. So I think there is, first of all, a big difference in the way you invest in large caps versus small caps. The second is on the research side. Clearly, what I believe is that when we research small caps, our effort in understanding the business model and management has to be much more robust because, first of all, a lot of small caps are new to the market, right? So when you're looking at very established companies, they've been listed for 20, 30, 50 years. So there is a fair amount of information available on the business model. How has it behaved across cycles? What are the global peers? And also the management is very well known because having been listed for so many years, there is a lot of information how management has behaved over a long period of time. With small caps, a lot of times that kind of information is not there because they have been listed relatively recently. The public information has not been as exhaustive as with large caps. So essentially, you need to do a lot more work, to my mind, in small caps to understand the business model and management.
Okay.
And the other big difference is in a lot of large and mid caps, if you are an institutional investor, you get a lot of support from the sell side, right? In small caps, a lot of times the sell side research is not there or it's very sparse. So that important input is also very different. So that's the second R of research. The third R is about risk. Now, obviously, small caps carry more risk on various dimensions. One is, of course, just the fundamental dimension of this business model and management, where you may go wrong in your research. But there's also the element of liquidity that, again, as an institutional investor, when we buy small caps, these are fairly illiquid positions. So you can't change them overnight. So you can say that the cost of going wrong is much higher in small caps versus large and mid caps. So this triple R difference, returns, research, and risk, to my mind, is very different for small caps versus the rest of the other categories.
Thank you for doing that for us. It's really very helpful. I don't think anyone is going to forget the 3 R's that you've used to help us understand the small cap category. So that really brings me to this other question that I think I can hear a chorus of voices asking, Manish Gunwani, what's in it for me? Basically, now is when we dive into the benefits of investing into the small cap category. Manish, do help us understand.
So just by that triple R framework, if we can do the research right and have great risk management, I think the potential returns on offer in the small cap space are going to be very, very attractive. So if we just look at historical data, for example, in the last 10 years, the small cap category average return versus the large cap category average return, the delta is about 6 to 7%. The small cap category has returned higher than large cap category. Now, obviously, history is no guide to the future. But the thing is, when you look at the wide variety of stocks available in the small cap space, the fact is there can only be 100 large cap, only 150 mid cap, but the number of small cap companies that are investable, which are growing well, which have reasonably good management teams in India is quite huge. And with that variety, which incidentally obviously is getting added to every year because you have IPOs every year, so the choice is becoming vaster and vaster. With that rich choice, I think if someone can execute great research, great risk management, I think the potential returns on offer are going to be very, very attractive. I also should mention that it may need patience and tolerance for volatility because small caps tend to be more volatile, and sometimes there'll be phases like 2009 to 13 where they may not do much. So you need a bit more patience. You need some attitude for tolerating volatility. But right. Yes, if you're able to do that, I think there can be reasonably good returns on offer.
And I think you've hit the nail on the target over here with respect to the returns, provided, as you pointed out, the other 2 R's are taken care of.
You're listening to Moneywise, successful investment ideas that create wealth. Did you know?
The total assets under management of the Indian mutual fund industry stand at about rupees 46 lakh crore, which is around 15% of India's GDP. The world average is around 75%.
Personal finance simplified, only on Moneywise.
Now, here's where I wish I had a crystal ball, but I'm reminded of something, a phrase that you used some time back. You said, history cannot always be a guide to the future. And here when I'm talking about crystal ball and looking into the future, I realize that, oh my God, in matters of wealth and money, I don't think you can predict the future either. So let me keep the crystal ball aside and let me just rely on your expertise and experience over here. Investors would certainly like to hear about what lies ahead, according to you, in the small cap space. What can we look forward to?
So I personally think, even at a global level, the Indian small cap space is probably the most exciting segment of global capital markets. And the reason I think like that is basically that, very simply, if you take all large economies, whether it's US, Europe, Japan, China, UK, clearly the highest nominal growth and real GDP growth for the next 10 years is likely to be in India, right? Obviously, our base is low. So I think, let's say anywhere between 10 to 13% kind of nominal GDP growth is quite likely over the next 10 years. And that is fairly healthy growth by any measure. Now, what we've seen, if you do an analysis of last 100 years of returns across all major countries, is that, first of all, in majority of countries, small and mid caps outperform. And that is especially true in phases when the nominal GDP growth of that country was high. So let's say Japan from let's say 1950 to 1990, or US from let's say 1900 to 1950. And there were phases where these countries did very well in terms of growth. And in those phases, typically mid and small caps do have a tendency to outperform and generate healthy returns. So I think the next 10 years is going to be very, very exciting for Indians, especially in the small cap space. So one is just the potential returns, but also I think that there are two factors which are very interesting. That India generally, first of all, has a corporate sector which is very high return on equity. So unlike some of these centralized countries like China, where the corporate sector ROE tends to be very low, in general, because India is capital scarce, the return on equity has to be high to attract capital. So the average return on equity in India is reasonably healthy. So that is one good thing as an investor, that the return on equity being high ensures that generally returns are good.
Right.
And two is, I think there are obviously geopolitical things which are happening which seem to present a great opportunity if some of the big areas where India was relatively weak, like manufacturing, tourism. I think the thing about small caps is when new areas emerge in the economy, they get first captured in the small cap space, right? So if you're going to see, things like this China plus one keep developing in new segments of manufacturing, if you're going to see India do some high-tech stuff in AI or chip manufacturing, I have a feeling that the plays on these kind of trends typically will manifest themselves more in small caps than large caps, because these companies have to be new, right? So overall, I think it's going to be a very exciting decade for Indian small caps.
And when you mentioned geopolitical, situations and trends pointing in that particular direction, I was saying all our listeners are going to say, oh my God, I have to start reading the newspaper line to, start to finish now, to keep myself abreast of what is going on in the world around me. Otherwise, this is not a thing for me. And that's really my next question, right? A lot of people feel they don't have the time or the knowledge to explore areas like the one that we're talking about, and that they feel they need professional guidance. We're all looking for this hero who'll come and save us from this lack of information over here. Is there a hero sort of a thing that I can look to, a well-curated package maybe of the small cap space or emerging businesses where I just want to, park my money and put my worries to rest, because I know a professional fund manager is taking care of that anchor or the person who's navigating me through these times. I've also heard about Bandhan Emerging Businesses Fund. So it would be great to understand a little bit about a fund like this one and what really makes it a good option for investors to consider.
So again, we are on this triple R thing. So clearly, I think a good fund needs to have a great research behind it and great risk management behind it. Mm-hmm. And I think we have built a great research team. We have put in place a lot of processes around risk management. So specifically for the fund, for example, I think at the portfolio level, one is at the research level, which, as I said, we think that the research team is superb and should keep generating great ideas. But at the portfolio level also, I think risk management is important. So we are doing two important things there. So while we're not benchmark oriented in picking stocks, but we ensure that at a sectoral level or at a macro level or at a style level, we are not skewed in one direction. So let's say at a style level, it's not that we have only value stocks or only growth stocks or only thematic stocks. We have a mix of everything. At a sectoral level, whether it's financials or industrials or chemicals or any big segment, we are there. It's not that we are ignoring, large sector weights and taking risk that, because sometimes due to macro conditions, even if you think that a sector is not going to do well, it may start doing well. So let's say there's an export sector, you think stocks are fully valued, but currency goes to 90 rupees, or on the other side it goes to 75. So you don't want to take macro bets by choosing to remain confined to few sectors. We believe that we should have presence across all sectors. So that's the first thing we're doing at the portfolio level. The second is about liquidity. As I said, a large part of our risk around small caps is liquidity. So at the portfolio level, again, we are making sure that we run a very fragmented portfolio. We have 100 plus stocks because we believe that in small caps, you need to manage liquidity risk well.
Fantastic. I think we have successfully managed to give them the concept of small caps and, of course, this particular fund being spotlighted over here. And to that, we owe our thanks to you, Manish, and thank you for being here. This is where we dust the popcorn off our laps. And we also have to tell our listeners that picture abhi baki hai, mere dost, because there's other topics to also discuss on the Moneywise podcast. But for now, thank you so much, Manish, for making this so insightful and interesting for our listeners to understand.
Thanks, Sheetal. Good fun being here.
You're listening to Moneywise, brought to you by Bandhan Mutual Fund. Check out the rest of our series for more insights on investment and personal finance. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. Bandhan Emerging Business Fund is a small cap fund, an open-ended equity scheme predominantly investing in small cap stocks. This product is suitable for investors who are seeking to create wealth over long-term investment in equity and equity-related instrument of small cap companies. The scheme riskometer is very high. Investors understand that their principal will be at very high risk. The benchmark is S&P BSE 250 small cap TRI. The benchmark riskometer is very high. Investors should consult their financial advisors if in doubt about whether the product is suitable for them.